Nvidia CFO Colette Kress was at a recent investor event and shared that there is absolutely still growth in front of Nvidia. Now, this is when Nvidia's stock price is down over 20% due to various bearish thoughts: DeepSeek, ASIC solution competition, AI demand slowing down, tariffs, export restrictions, and various macroeconomic concerns. Now, as a long-term investment, noise like this is usually short-term lived, but what is crucial for long-term investor is growth potential. And with Nvidia sitting at forward PE ratios in the mid-20s, I believe there is still reason, but not a guaranteed, for Nvidia to outperform the market. So let's get started. But if you want to get more semiconductor news, make sure to check out my free daily semiconductor newsletter, whatthechip.com. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so just a quick look at price action. I am recording this on Sunday, and Nvidia is down roughly 24% from its 52-week high, which was nearly around $150. Now, in the past year, Nvidia is up roughly 31%. And I believe still outperforming the market. Unfortunately, year to date, the stock has kind of seen massive headwinds as the stock is down roughly 18%. Now, if we look at current PE ratios for Nvidia sitting at 38.36, now forward, which is about 12 months from now, a little bit less than that, is sitting at 25. I'm going to say there's not a lot of big tech companies growing at the speed Nvidia is, seeing that 25 PE ratio. Now, forward 1 year, which is about 2 years from now, is 19.71. Now, let me say this. These are all based on analyst expectations. And a lot of these analysts are bullish that the AI market is going to continue. Now, I do believe the AI market is going to continue. But if you are not bullish in the AI space, if you are not bullish in data center spending, then this is not the stock for you. Now, the main event we're going to take a closer look at is Morgan Stanley's Technology, Media, and Telecom Conference. And this was on March 5th of 2025. And this is one of the few times we hear Nvidia outside of earnings. Now, a few days ago, I did kind of their overview of their healthcare industry that they discussed a few days before this. And we get to see, right, earnings call, we get kind of a financial picture on over the whole company. But these conference events are great where we have more direct Q&A sessions. We get to hit certain topics a lot more than we do during the earnings. And I personally learned a lot during this event. Now, one of the big questions for Nvidia is, are we at the peak of AI? One of the biggest bearish case for Nvidia is that its AI revenue will disappear as quickly as it came. Again, I believe that the growth opportunity is still in early stages. Does that mean that I believe the stock will 10x again? No, I don't think so. But I do believe it can outperform the market dramatically. I think there's various health tailwinds for Nvidia, like the healthcare market, the robotics market, the overall AI innovation in various spaces, accelerating computing. So Nvidia can continue to grow revenue and can continue to outperform the market in the next few years. Now, during this presentation, Colette was asked the same question, and we kind of get an insight of what she believes can happen with Nvidia.
I'd say the largest statement that we constantly look at is, are we done? Are we at the peak? Are we at the peak of what we're going to see at AI? And I think the vision that we see and the vision that we know, knowing that the installed base of general purpose computing needs to be transformed to accelerated computing, just to manage the significant amount of data, but also to deal with the needs for AI and what AI will be for us in the next decade. So there's $1 trillion of an installed base. There's more than $1 trillion in terms of focus in terms of AI. So is this it? Absolutely not. Is there still growth coming and in front of us? Absolutely.
So I think that was pretty great to hear from the CFO. And she even laughed a little bit when she thought, is this the end of growth opportunity? She said, absolutely not. And she gave two main bullish theses here. First is just accelerating traditional compute. And there's various solutions where it's not just driven by AI, but CPUs are not enough for a lot of this software acceleration platforms that we're in right now. So that's the first, and there's a $1 trillion of installed base there. Then the second thing is just the amount of data that we need for AI. There's an extra more than $1 trillion in opportunity thanks to the focus of AI. So even if AI is not as big as it really seems to be, which I don't believe is the case, you still have various opportunities in accelerated computing. Obviously, the market has kind of priced in both and mainly AI, but there's still growth opportunity with this massive total addressable market with just one of those segments. Now, another topic that's been very heavily discussed in NVIDIA is you're producing a new product at a yearly cadence. Aren't you eating up your own customer, right? We have the H100, the H200, the Blackwell platform, right? Wouldn't customers just wait for the new Blackwell and not purchase the H200, especially now that the Blackwell platform is ramping up? But Colette mentioned that the AI market is evolving so quickly. So right now they are completely supply constrained with the Blackwell platform that those companies that need to increase their compute, they're not going to just sit idle and wait for Blackwell if there is opportunity of buying the Hopper that is going to allow them to sell both Hopper and Blackwell at the same time as they wait for massive production in the Blackwell platform. The other thing is because NVIDIA is developing at a yearly cadence, they are their own competitors. So obviously, if you can't get the number one product, which is the Blackwell in an innovative space, you go on and get the number two product. And that number two product is Hopper at the moment.
So our H200 did grow sequentially, and this is important. People ask us why. Why are people buying Hopper when they know Blackwell is there? Many of our customers are finishing out their builds in terms of the data center and or adding on more to an existing cluster that they need more compute to do so.
All right, so we get to see that H200 did grow sequentially and customers buy Hopper as they wait for Blackwell. And we also see that NVIDIA does believe that they're both the number one and number two. The next kind of issue that we're seeing a lot in the overall market is just the DeepSeek issue, right? Many are worried that AI is getting cheaper, which is bad for NVIDIA. But NVIDIA itself has made AI cheaper, right? We're going to see how they mention how inference has improved dramatically. And after we hear what Colette has to say, I want to share my overall thoughts on why getting AI to be cheaper is very crucial for NVIDIA's mission.
Inferencing for us, we've probably improved its performance by more than 200x just over the last 2 years in what we've done and accomplished.
So Colette mentions that just in the past 2 years, they believe they've improved the performance or made inference 200 times cheaper. So if they've done that, they pretty much are doing exactly what DeepSeek is doing in making AI cheaper so the masses can adopt it. And the reason NVIDIA wants AI to be so cheap is that they want AI models running 24/7. In all industries. And this is what they call these AI factories. They want these massive companies to build these AI factories, which are pretty much just AI servers that are working nonstop 24/7 to build tokens. And for those that are not familiar with tokens, this is kind of like the product that large language models produce. So when you ask large language models a question, they produce a token and that token is the response. So if AI is cheaper, you have AI factories just running nonstop, producing tokens and tokens over time. So as one of the great things is right now we're kind of seeing this reasoning models, which is this time of thinking model, very similar to DeepSeek R1. OpenAI has O1 and O3. And these reasoning models are creating even more tokens than before. And also they are creating tokens just as the beginning because they are giving their train of thought and showcasing how they're thinking throughout the steps. Now, the other big issue that we're getting is supply. Is supply still an issue, right? And supply constraint capacity has been a thing for NVIDIA that if they had more capacity from companies like TSMC, they would be able to grow their revenue more and more. Now, this is great in one way is because supply capacity allows them to have more visibility. If they can't build all the chips at once, then they kind of create some form of backlog and they get to say, hey, look, we are seeing what our customers want. But right now, there is this issue that maybe supply is no longer a thing. And now, mainly because demand is slowing down. But Colette pretty much just bit this theory in the butt and mentioned that they're still growing in supply because that is what is going to allow them to meet demand.
Where we are right now with our Q1, doing exactly what we did in Q4, scaling that supply to meet the demand that's in front of us. We do have demand that we do want to catch up with the customers, but we have strong demand for Blackwell overall.
Next, we've also had this discussion of Nvidia's Blackwell product, right? And the Blackwell product had issues at the beginning that actually ended up causing margins to drop over time. So many things are causing that. First, obviously, ramp up. You kind of tend to have lower margins. But Nvidia's Blackwell issue that happened a few quarters ago also is creating some pressure on margins. Now, Nvidia, during their most recent earnings, if you watched my earnings show, there was a question that came up. Nvidia also discussed that they were ramping up their Blackwell products faster and faster than normal, causing even more pressure for margins. And I kept wondering why. Why would Nvidia want to ramp up that product so much quicker and take the pain in margins if they just kept on pace, they still would be able to sell that Blackwell platform and they would have been able to not take a massive hit in gross margins. I mean, remember, gross margins for Nvidia are normally in the mid 70s, but now have dropped down to the low 70s, where in this most upcoming quarter, it's really expected to be in the low 70s, 71 and below.
Blackwell certainly had the anomalous because we had to do the mass change, okay, which really got us back on schedule. The mass worked very well. But again, we do want to meet what the customers' desires were. They've got their data centers up and going, and we need to finish out and get that compute to them as early as possible. So really, it was just that piece of it. But no, I don't expect any of this going forward. I think we can focus and maintain just as we end the Q4 in the mid 70s and continue past that.
So it answered the question that I had during earnings. And the main reason is it seems Nvidia wants to keep their customers happy, right? They had promised to their customers before that they were going to have this capacity available to them a few months back. And because of that, a lot of these cloud providers built up data centers that now they can't pretty much fill up because of this delay. So Nvidia is willing to take that hit in gross margins to be able to make as much Blackwell as possible, to be able to send that compute to them and keeping those customers happy. So now that I understand this was a question again that I had that I didn't know if it was the right direction or the wrong direction. But if this is the real reason, I think it's the right play for Nvidia. And even if we see that hit in gross margins, in the long term, we should expect to go back to the mid 70s. All right, so that's all I pretty much have for this presentation. There were a lot of other topics discussed, but I think every NVIDIA investor should be familiar with this. It did cover a lot of the bearish thesis. And obviously you can say, Jose, this is the CFO of NVIDIA. They're obviously going to say very bearish, bullish things about the company. And I agree. And that's why you need to have your own questions and kind of try to see the truth and maybe the exaggeration. I believe that all this is true, and NVIDIA's management has a history of being trustworthy to investors, in my opinion. So for that reason, I don't have reasons to doubt what we're hearing right now. But it is important to know that the AI space is innovating at rapid levels, that so many things can change. And that is why I kind of do these AI episodes almost on a daily basis, so I can keep track of the AI market as a whole. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.